here is involved in equity investment? Equity funds of one kind or another. Let me tell you this, I'm not going to embarrass you by asking you to put your hands up, and I know there are question marks about equity performance because it's a very tough area. And before we criticize or point a finger, let's recognize that it is perhaps the toughest area in the world to make a call right now. But listen to this. I have been polling investment managers of many of your competitors and in big industry conferences for the last 5 years now. And I've asked them always the same question. I'm not going to ask you this question today. It's too embarrassing and it's too sensitive. But I'm going to tell you what they answer. I ask them this question. I say this. Put your hands up if you believe, hand on heart, that you can confidently outperform a tracker which is simply controlled by computer technology. Year on year. After deduction of your charges, and the entry charges to start the fund, of whatever it is, 4.5%, and the charges of 1.5% per year. Put your hands up if you can confidently recommend yourself as a fund, as a good investment to your mother. And you know what? None of them do. Or I exaggerate. About 1.5% of them are foolish enough to put their hands up, and the rest laugh at them. You know, it's the biggest hidden scandal of our day. I spend a lot of time in the media. In fact, my audience reach on stories each year must be, in a busy year, is about 400 million. It's the one story I've never commented on CNN or CNBC or anywhere else. I've never actually told this story, this truth, this fact, this reality about the investment management equity business. This thought that actually perhaps all of our efforts simply destroy wealth. I'm exaggerating, forgive me, just to make a point. I don't necessarily believe everything I'm saying today, but I'm just trying to provoke a discussion. It's up to you to decide what I really do believe. But I'll tell you this. When my father died 3 years ago, and my mother asked me for some investment advice, I said, for goodness sake, this isn't my opinion, I'm just telling you, fund managers do not recommend their products to their mothers. No. My friends, my first rule of selling is this. If you can't sell something to your mother, don't sell it to anyone else. Are you hearing what I'm saying? You see, it's an area that Spitzer could come and start licking away at, isn't it? You see, look, here's a story. You know, it's so secret that if CNN was here today, I could not have this conversation with you. My friends, if that's the truth, if it is the truth, you're on big-time danger ground. You're walking through an ethical minefield. And you might say, oh, Patrick, don't be rude about us. We outperform the tracker every single year. You might say, Patrick, it's only about 10% of our funding value anyway. And you know what? I'd say there's something called cross-contamination. There's something called an industry challenge. There's something called mis-selling. It could become one of the biggest mis-selling scandals of the next decade. And you might find that you're not tangled up in it at all. You might find that you've always outperformed, you've always delivered on every promise, every product you sold has been a great investment. But my friends, believe this. If Spitzer or someone else starts shining the spotlight on this particular area, it will be very difficult to prevent the whole industry, that whole section of industry, to come crashing down around you. And if it does, it'll affect not only investment in that kind of product, but there will be cross-contamination on brands, products, processes, companies. Are you hearing what I'm saying? Put your hands up if you think what I'm saying is fantastical nonsense. I've just added you to my survey. But actually it should worry us. It's a kind of a wild card. Actually, it isn't a wild card. I said a wild card was a 1% risk of going off in the next 12 months. Put your hands up if you think that's a higher than 1% risk of going off in the next year or two. Put your hands up. Significantly higher, like a lot higher. Put your hands up if you think it could be a 2 or 3% risk that this could actually go off. This balloon could go up in the next 5 years. Put your hands up. Oh, I hope you have a contingency for this. I hope you have a disaster scenario plan for this. I hope you have an industry-wide discussion going on about this at this very moment. I hope you have a plan to exit from all kinds of products that you know you can't sell to your mother. I'm sorry, remember, I'm deliberately exaggerating the reality to provoke a discussion.